Waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high. Watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called. Balance face draw down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. Yeah, the crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance base draw down, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match traders speed. Technology serving the traders need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Good morning, everybody. Welcome to Seacrest Markets live on this fine Thursday. What a day we saw yesterday with non-farm payrolls coming out much higher than expected. Did anyone take any trades? Did anyone get involved? I know that a couple of people did send me a few DMs yesterday. One of the DMs I got was a very impressive short in sterling yen. And for those of you that can see on the screen, that's one of the shorts that someone took. And there is the second short that someone took. So a very good trade, or very good set of trades there. Let's look at the levels. So the initial short was from 214.5 from what I can see. And the next, the first short was sterling yen, which you just saw, which I just mentioned the numbers. The second two shorts were on this chart, which is sterling Aussie. And their first short on sterling Aussie was from 2.00, the flat number. And their second short was 1.96, so 196. So let me see if you can see both of those trades. So both of those trades, your first short at 2 and the next one at 1.66. So that's an impressive trade. Considering when that screenshot was sent to me, it was trading at 191. Yeah, nice. There he is, look. He's messaged. So Anthony was the individual that shorted at 214.5 and then 2 and 1.96. So very nice trades on those. Big bank indeed. Now, overall markets, obviously, as you could tell, we had a bit of a reaction around the non-farm payrolls and overall data that we was expecting to come out, but pretty much another range-bound day. And I think what a lot of people are kind of discussing at the moment is, are we going to stay in this range? This range on the S&P, which is about 6,900 to 7,000, is a really tight range. Non-farm payrolls did come out better than expected, as I've already touched upon. Non-farm payrolls came out at 130,000 versus the 70,000 expectation. The unemployment rate subsequently dropped to 4.3%. So what we're seeing is resilience. Now, that will push the market back in terms of the timing for the Federal Reserve to actually go and cut rates. Realistically, the original rate cut was going to be from June. So now they will realistically look to push that back to July. Of course, we've got Kevin Walsh. Yes, he's gaining traction. Yes, President Trump claimed on Fox Business that, Walsh-led Fed could deliver 15% GDP growth. Now, that's a bold statement. Could he lead 15% in GDP? I mean, to see 15% GDP in the US is unrealistic. It's wild. But that statement did cause long-term treasury yields to stiffen. So markets will start to weigh the inflationary impact of such targets. So everything has a positive and a negative, right? Everyone looks at it and goes, 15% GDP growth, lower unemployment, non-farm payroll data is bullish. But what that starts to do is it weighs on inflation. So even though we're seeing good come from macros, we're also seeing potential negatives on the flip side from inflation, because what happens? Inflation goes up. We start to get a very hot economy. We then have to look at trying to increase rates to reduce inflation. So then rates go up. When rates go up, that causes problems across lending facilities. It causes defaults. And in theory, you'll start to see unemployment rates go up and non-farm payroll data continue to go down. Less jobs will be created because firms will look at either maintaining their staff or reducing their headcount. Payroll is what I was going to say. I was going to say hayroll, but I realized headcount and payroll are not a word when you can combine them. So yeah, you know, when it comes to the indices, the Nasdaq, the S&P, we did see a relief bounce after the NFP. Data was strong enough, as you saw, and as I've just mentioned, which suggests that there's no landing within the economy. But again, it's still not hot enough to suggest a rate hike. So with targets coming into play, the expectation of inflation increasing, then we are going to see rate hikes. The Dow, I haven't touched upon. The Dow yesterday hit, well, the Dow yesterday still hovering below that 50,000 mark. Again, significant milestone in the markets. We've got the S&P trading at 7,000 nearly, 6,962 on the market right now. I'm still, like I said, I still believe we're going to be looking to take out that 7,000 level. Markets are trying to push this down, but a lot of the data behind this suggests that prices want higher. We've mitigated that 6,990, 7,000 level 3+ times now, and that will continue to weaken. Obviously, the fear and greed index is sitting at extreme fear at the moment, so I don't think we're necessarily seeing as many buyers as we possibly would like to, not only in the indices, but in cryptocurrencies as well, like in Bitcoin. If you look at where their index is, it plummeted to 9. So the fear and greed index alone plummeted to 9, which means extreme fear. So the market is really trying to digest what the best move is. We're seeing decoupling from Bitcoin. We're seeing metals kind of fade out. We're seeing more money go into cash and treasury bonds, or treasury bonds or T-bills, but we're not seeing it come into the market as much. So if I was to kind of give an overview of my current consensus on the market, it would be consolidation on gold, bearish on Bitcoin, consolidation on euro dollar, and bullish on dollar yen. That's realistically where I would kind of see that market heading at the moment. I don't really think we could see well, what I want to see is I want to see the market ranging for a few weeks. I want it to really kind of find its base and then start to build structure to the right. Because again, if we look at the S&P, and I'll zoom in because you can see the range that we've got, we have this huge area of demand and support down here, and we have this huge area of resistance / supply to the upside. So markets are just trading inside of that. Now, of course, like I said, we had this huge expansive move yesterday, but the recovery came in, demand staying in control. And there are going to be ample opportunities, right? So what time is this? 3:15. That's UK time. So if you're trading out from the US, then that's nice and early doors, right? So 10:30, we start to get that push up. We get the fade of the news. Demand starts taking control. So I'll just use the arrow for now. You've got demand start taking control. We then take demand, but immediately, if I just do this just like that, so you can see that we've taken this low, we've traded down, we failed to push lower. We've pretty much created what you call a W reversal pattern, right? So there's the W, and it's continued to the upside. It's not a harmonic, so we didn't necessarily get that sell-off that you might have expected on that Fibonacci extension. This was the high that we needed to go. This high is gone, and we're now just ranging. So we're pretty much maintained around that point of control. For me, if I was going to be looking for shorts, it would be from somewhere in here. And again, that's based on just the way the structure is. We're trading inside a range. I'm looking to get short at the extreme of the range. But overall, my bias is long on the S&P. So I am lesser inclined to take shorts at the highs. I am more than comfortable to trade into the highs because I'm positioning myself for 7,000 to break. If 7,000 doesn't break, but for example, we was in from, I don't know, 6,950, let's just say, and we're trading into 7,000, well, there's enough RR available on that trade that I can get in and out. Now, long term, I'm always buying. So, you know, when we saw the dips, I was buying into them. As we go up, I buy into them. So I'm not too concerned about the commissions and the swaps and the spreads that I get charged if I hold overnight on the swaps. You know, when you're day trading, you're just looking at, okay, I'm buying it at 10, I'm selling it at 15, I've made blah. Obviously, factoring commissions, you net this. I then buy in at 20, I sell at 25, or I sell at 27. Because from a day trading perspective, I'm looking at the active income rather than the passive income. My passive income is taken care of by the portfolio. My active income is taken care of by my intraday. So whilst there are arguments for investing, positions, swing trading that is, you know, less detrimental on your revenues generated for a broker, when you're day trading, if you can hybrid the models, yes, you have to kind of look at the working cost of capital. Like, oh, every time I enter a trade, my spread is X. You know, if it's a raw spread account and you've got $5, $7 commissions, then realistically you're paying out about $7, maybe a little bit more. Fluctuate, depends on the variability of the opening spread. Alternatively, if it's all in the spread, then you're going to be paying about the same kind of $7, $8, unless obviously underlying market widens out and spreads widen out and all of that jazz. But then you've got to factor in your swaps anyway and your rollovers. So you just need to bake that in. You know, again, whoever you're using for your metrics, your analytics, that should be kind of that should be recorded, because it just gives you an idea that, okay, I'm gross, you know, I'm taking 1.5 gross RR, but actually net I'm like 1.41, for example, because you've got to factor in your cost of working capital. Again, you know, it's not that much of a cost. And if you're day trading and you're only taking a couple of trades a week, then it's almost irrelevant. But if you're scalping, then of course you've got to factor in your RR, your profitability, your absolute edge, because you are going to be hitting trades and it's going to cost you a hell of a lot of money. If you do 10 trades in a day, you know, on $7 round turn, that's $70 alone. So you're, I suspect you're hoping that if you're taking 10 trades a day, you should be making, I don't know, a couple of $100 a day minimum, depending on obviously your overall size. One lot, of course, is $7. So again, if you're not trading one lot, then you've got to break down $7 per the increment of actual lot size you're trading, or not lot size, the partial lot. So no, so overall, I'm building my bias into the longs. I'm happy to kind of get into these moves and trade into the extreme. I mean, it's a bit too high anywhere from in here, really, for me to have considered it got long. It was also quite late in the day, about 8:30 my time, and I was actually out of the office by that time. I was out in the countryside, very far away, with not the greatest of signal, which is not great when people need to get in touch with you. So markets obviously just, you know, front legs bullish. We're continuing to be bullish from this morning, you know, heading into Asia. Sorry, from this morning throughout European session and the opening of London session, we had some nice moves, you know, coming into the session. Just before Frankfurt open at 7 a.m, we started to push up. We traded into the higher. Looked like we was potentially going to try and take this low. That got respected as we came into post London Open. and we've started to push up. So overall, thematics are showing that we are consistently looking for higher highs in the market at the moment on this front leg. It could be short-lived. Again, at the moment, we're trading inside nothing on the left. So, 69, 68 is an area of imbalance, which was previous area of demand, previous area of support. So some could be looking at this to be your kind of your support resistance flip, and then be looking to get short from that. But until, one thing most traders fail at is patience. So even if it comes into 69.70s, good morning both. Even if it comes into 69.70s, you don't just short at 69.70s. You wait for the market to confirm and show its hands. Let the market have some crumbs, then wait for the trade, because you increase your odds if you wait for confirmation. So very similar scenario. What I'm trying to say here is if we get short from up here without confirmation, it's the same as this move. So market started, if we wanted to get short from inside here, had we have not taken profit inside this leg, which again, depending on your stop, there's zero chance that you did. You're waiting for the market to come back up and respect. And because we're overall bullish, demand is in control, we want to see another break and then confirmation. And then from that confirmation, we could maybe get in from somewhere inside here. Obviously, somewhere in this front leg would be an entry opportunity. Rather than trying to call the top or pick the bottoms, trade with momentum, trade with the overall order flow of the market, trade with the overall structure of the market. Now, the structure, of course, is on the lower time frame going to be lesser weighting, but if demand is in control, this would have been the, well, even though that didn't sweep, right? So let's just say this did break, because I'm going to use this as my example now. So let's say the high was here and we broke above, so that's the break above. If price broke above, comes back in, you got in and about, let's say you waited for confirmation and you got in about here. Let's say your stop was below here. This area right here would have been pretty hairy indeed. And I'll run an RR tool on this just to show you something. Let's say we got in here. Our stop's below this. There, it may have been stopped. I don't know. Wait a second. Depends on the spreads. Maybe it would have been a bit hairy. That is, without shadow of a doubt, your backside would have been going like a rabbit's nose. Trade comes in. Whether we're in or not, I can't confirm. But let's say we got taken out. Right? Let's say we got taken out. We start to show signs of moving up. Okay, so first point to consider is our stop was in the wrong place, because our idea was never invalidated. Our analysis was still valid. Our stop placement was just shit. Okay, so our stop placement was god awful. We've been mitigated out of that trade. We've got hit out. And then what happens? Demand continues to take control and we trade higher. Okay, so we've reloaded. Our powder's dry. Market got us. We've got taken out of a trade. If we take more than one trade per day, let's say we take 2 trades per day. So we've still got our limitation. We've hit no other trades, right? Okay, so demand takes control. We get a further break. Demand is in control. Okay, so this is the next point of demand that we could look to consider as an area of support that the market could want to get long from. Okay, so we get this. All right, so we're now long here. Where's our stop going to be? Do we place it here? Do we place it a little bit lower? I can't call that for you, right? But let's say we placed it here. There's your 1-to-1. If you're taking 1-to-1, that's gross 1-to-1, okay? If your strike rate's higher, you don't necessarily have to worry too much. And if your sharp ratio is above 1.8, do we get anything else? Okay, no, not really. We're still in this trade. If we were holding overnight, Spreads are obviously quite wide. I mean, actually, yeah, we would have been taken out. This trade would have been a loser. So this trade would have been a loser because at 2 o'clock in the morning, the spreads would have been pretty wide. So we would have more than likely been hit on that. Spreads would have been okay on this one. There's no major wick that we would have been worried about. We would have had ample downside. Our stop on this, what is this, an M5 chart? Our stop on this would have been okay. You know, I don't see that as too bad. Could have been tighter, but I'm not bothered about tight on stops. Then obviously market trades higher. Then, you know, coming into the European session this morning, pre-Frankfurt, you can still see that we've got this level here that broke that supply. So this is an area of support / demand. You know, maybe some European buyers would have wanted to come in. Okay, step in. Let's see if we can put this. Let's put our stop underneath this. You know, let's aim for 1R. You got your 1R, and that's it. You know, so far. So European buyers have stepped in. We've got the longs from overnight in Asia. We had the original stop that we would have taken a loss on. Original long trade that we would have taken a long on via the stop being hit overnight if we held it. What time was the actual entry? 9:15. So on the CFD market, yeah, you could have got in. On the futures market with props, you wouldn't have got in. So any CFD broker or futures broker, you probably would have had the ability to trade on. If it was a prop firm, again, you're beholden to their news, beholden to their rules, and beholden to their trading styles and informations. So we took one loss. Let's just call it what it is. We took one loss. We followed momentum. If you were trading Asia, so you were trading pre-New York into Asia, or you were trading New York close into pre-Asia into Asia, then you've got your two trades overnight. Your one is a loss, your one is a winner. And you're about break even on the day, maybe small down based on some commission factoring. And then had you have been trading into pre-European, European Open, then potentially you'd have had another trade available. Alternatively, if you didn't trade Asia or close in New York, you may have taken the initial European trade, which is your 1R. So if you targeted 1R, you're done for the day. Now, what can we see? So market's just swept the highs. Looks like we're failing to break at this moment in time. So the expectation would be for price to initially pull back into something down here. Now, what I'm seeing is market sweeping, but demand is still in control. So we need to take into consideration two things. We need to factor in one. If the high continues to fail, then this low is now weak. So not only is that low weak, that low is weak as well. So we expect these two lows to go. The other consideration is demand is still in control. We're not reacting to anything from the left. We've just got this point of control. 7,000 / 6,990 is incredibly above us. And we are seeing that constant sweep of price, trade back down, sweep of price, trade back down. So I know we can't go off of historical probabilities and historical moves, but it is how the majority of people factor in their trades. So they'll go, on a probabilistic basis, based on my back testing, historically it's done X, Y, and Z. So thus I would probably look to do that if it's in my probability or in my favor. So there is the chance that we're just going to be pulling back into demand. And then just because we've pulled back into demand, it doesn't necessarily mean we get long. I want to see price start trading up. If price starts trading up and it gives us the edge, the methodology, or an idea to get in the trade, then we take it. We don't just buy it on the dip. You're day trading, you're not investing. So buying the dip and investing is a little bit different to buying the dip in day trading. You know, there was a stock last year that I was very keen on buying, which was Target. TGT is the ticker. And it was trading at the time around your low 90s into your 85s. came up on my screener, significant, staple in the US economy from a US market. It's a staple. And I only bought a few shares. And obviously every night I check the markets. And last night I was just checking the markets and just reminded me of a couple of things. Like I'm long Caterpillar, I'm long TSEM, I'm long Brinks, I'm long Target. But Target is now trading at just over 114.5, which is, if I look at my average mid, I got in at about 85 and a quarter, give or take, just purely based on value. Caterpillar, my last buy in Caterpillar was 365s. My buyers in TSEM, which is Tower Semi, was 47 and 8ths. That's trading at 136 on pre-market. I'm just trying to see if I've got any else. I want to see if I've got any losers. Give me a sec. Let me just open up my portfolio from last night. Well, where is Coca-Cola? Oh, my charts have refreshed. What are you doing? Netflix I'm down on, so Netflix I'm long on, but unfortunately that's hitting me. Anyway, so coming back to it. So you're not dollar cost averaging and buying the dip in day trading as much as you realistically should be. Like much as you realistically shouldn't be. Coming into 69.50s, it's a pullback. You want to see momentum continue in the direction of your favored idea to give yourself the best probability. Again, just consider the fact that there are two scenarios to everything, if not more. The fact that we're sweeping the highs suggests that the lows are weak. And if demand is in control, then realistically, this high should be breaking with full bodies and closing. It shouldn't be sweeping with a wick. Obviously, if you go down to a lower time frame, we might see it. Now, you can see on the 2 minute as well, right? We're just sweeping. Look, if we look at the first candle where my crosshair is here, that's the higher candle wick sweep. If we look at this high with the crosshair, we just get, another sweep. We do close on the M1, but we immediately reverse. And again, we do close on the M1, but we immediately reverse. But the high is suggesting that, we aren't buying. We're exhausted up at this top, which means that down here at 69.57s and 69.54s, these two are prime to be taken. They're weak. So, the goal initially would be wait for something in here, get short, target 1 to 1, 1 to 1.5, and then wait for market to give us the indication to get long, or alternatively, just believe that the market's going lower. But you have to wait for confirmation. If I was to look at this, right, as a 1 minute trader, for example, I'd be looking at the high going. I'd be then looking at this, and I'd want to see price come back into this, like this. Again, these are not there's not much weight about this. And then it looks like I probably would. Okay, so then I'd be short on this, but I don't like it, but I would be short. Stop above here, but I hate shorting momentum. Momentum's bullish. This is also what you would deem as potentially a flag pattern. So you've got that idea that actually this is a bullish continuation pattern. So trading the reversal is very stupid. But again, if and I'm not, if I was to trade this sweep, I'd be looking for, well, actually, I'd be looking for this to go. But let's say I went this. I'd be looking for this to go, you switch, a change of character. I'd be then looking for some confluence to get short, and I'd be trading into, I don't know, 69.58s. That's what I'd realistically be trading into. And that would just be purely on that analytical perspective, just based on where we are in the trend, where we are in the range, what market's looking like it's starting to do, and then adding in some fundamental confluences and looking at where there are some weak lows. And these two are weak, so we could be looking to target that. Again, we've had a breakout. We'd expect a pullback anyway, just like we have seen. We had a breakout, expect a pullback, had a breakout, expect a pullback, breakout, expect a pullback. High has then been respected. We've taken the low, pull back into the high, taken the low, pull back into the previous high. Low gone, pull back into the previous high, and now selling has exhausted. Why did sellers exhaust here? Because what happened, we traded into a pivotal higher time frame demand. That demand obviously then got respected. We've traded up into supply. We've then come back into the demand here, and we flipped that previous supply. So prices then continue to the upside. Okay, so really basics all of the time. You're looking at demand, supply chain fundamentals. You're looking at order flow. You're looking at overall market structure. So it looks like we had a pretty nice reaction on that candle. And again, buyers are stepping in at 69.61, 69.62, which, you know, fairly normal. There's a bit of demand around here. You know, you had this range. So if we just circle this, we had this little range here in price, which if you look all the way across and we just run a horizontal, we've got previous areas of resistance, we've got points of control, support, and then obviously we've got the range. So it doesn't surprise me that market is struggling around that. You can see that we've had wicks rejecting this area or price action holding that area. But again, if you were trading the 1 minute, that is probably how you'd look at that trade. Let's take a look at gold. We'll come back to that. See if that idea would have got stopped. Oh dear. Sometimes when you look at the higher time frame charts and you just see that nothing's done, it's crazy, isn't it, really? You know, gold is still trading in and around that 5,070, 5,100 level. So range bound persists. Upside, I mean, it does look like it just wants to go short, but that is how you would look at this market, right? You'd have that break to the downside, but demand stayed in control on the higher time frame, and we get that move up. So a lot of you will just go, sod it, let's get short. And I see why. Like in my early days, I would be looking at that and be like, short it. And it's difficult because you're just seeing that you think there's a ceiling above. But when I'm just trying to think how to word this properly without getting in trouble. So early on in my trading career, when I was prop, there was a couple of traders that were absolute. They shouldn't be trading. They were dog shit. They shouldn't have been trading. And every month they'd bring me their P&L statements and their trading statements, and I'd plug it into data and I'd run the data and I'd plug it in and get all the metrics and the analytics up. And their analysis was perfect. Their analysis was fantastic to fade. It literally was, find a trader that's got incredible analysis and every single trade idea you could fade. And without a shadow of a doubt, right, and I could probably still prove it to this day, I've probably still got that person's data. But for example, you could, even if you haven't got the expensive data, you could go and plug it into something like my FX book. And it would give you all of their data, it would give you all of their trades. And then if you go back on the charts and plot it all up against the charts, you could see that every single trade idea that they put out there in the market was a contrarian idea. You would literally fade all of their trades. And you'd have, from memory, it was an insane strike rate. It was insane. So we basically just did that until that person decided that they no longer could float. But then they became an analyst again, and the analysis was on point. It was always wrong. I mean, it was an expensive time, but also the fact is you were paying someone to give you analysis that you was actually trading off of and fading it. So it was great. And I think you could probably do that with the majority. And I say the majority because there are an incredible minority of signal providers out there. They're rarely, they're very rare to come across, and they're very hard to come across, and they're expensive. But the majority, your average Joe of signal providers and streamers, they are rubbish traders. They make more money in affiliate commissions, probably. So range bound, thought the NAP data would have sent it crashing, to be honest, but it seems very content where it is. Reminds me of trading around the 3600 region at the end of last year. Let's have a little butch. Let's pull it up. Oh, I'm still too high. 1 second. Whoa. Yeah. I mean, 3300 was the same. 3600s, very similar. 3700s, even 4100s. The reason I say 4100s is because we've had that peak at 4,300 at the time. We had that pushed down, and then the market's pushed up. We had a sell-off, we traded up, we ranged, and we continued higher. So this is that kind of movement now, right? We've got the fade off of that big news. We had to push up. We started to trade higher, and we maybe get that small sell-off and then continue to trade higher. I mean, it's just rangy. Boring markets. Boring. So don't get caught up in the noise, please. Did we talk about some trades yesterday in gold? Let's have a look. Oh, we did. Okay, so Okay, so shortly after our live session, that extreme that we were talking about, the short into this level here worked, but obviously, as you can see, we shorted out from the extreme into the ascending trend line, and then it failed. Price then traded higher, created a new high. We took out 5100, but we failed to hold. 5100 immediately got reversed. And then if we look at where this is, data came out and started to create erratic moves, and we ranged since. So if we get rid of this, my eyes are hurting. And then we do this. So we're still holding these trend line support. Not even the end of the year now. Look at our chart was around the summer. Yeah. And breakout, demand's holding, supply's holding. So we're just ranging again. It's not exciting. This is not exciting. Let's see. Silver was a bit more bullish yesterday. Silver actually had a better move. So let's see if silver actually pulled back. Good. Silver did pull back. Let's have a quick look on the 4 hour. Let's see how much it pulled back. All right. So shortly after our live stream, we rallied into that supply, which is the supply that we mapped out during the live. We've reacted to that that supply, and we've corrected. I mean, the PA is, the PA is immaculately efficient, but it's extremely corrective. We've come back into demand at 81.90s. We haven't really done anything, but the expectation is for price now to trade higher based on the demand in control, but we're also reacting from supply. So this would be your last port of call for long. So if you want to get long here, you would obviously need your confluences, your confirmations, but demand's in control. prices continuously making higher highs, higher lows, but the negatives are we're trading into a bigger, higher time frame, medium time frame supply, which is at 88 to 92 level. I mean, the fact that we've made markets. I'd be inclined to say we can go higher from here. However, I'd need to see this high go. So I would still be long. Based on that, I'd be looking for longs into 90, because that's more into the extreme of that supply. Because this demand did break, but obviously we've had a reversal. So I think we could do this. Let's check on the higher time frame quickly. I'm gonna put, yeah, I might. No. Okay, so daily supply still there. If I get confirmation on the lower time frame that we're putting in lower highs, lower lows, and we get confluence to get short, then there's potentially an idea there to get short. But to me, we're still bearish, unconfirmed, because we've only broken demand once, and we've still got maybe higher prices available, you know, somewhere up here. So I'd be quite interested in so messy. Not even my drawings, the charts. Break, take this, take this. Okay, so we broke, we respected, we broke, we respected. We broke, we respected. I'd like to see this logo to get short. Okay, no, we didn't break that. We swept it. No, okay. So I think we just need to wait for markets to give us some further confirmation. I mean, it's so messy. There's no reason. Like, we've got ascending trendline support running up here. So higher lows are being put in. The sell-off is getting shallower, which it does entice you to want to get short. I can't lie. I cannot lie about that. But because we only had this as a sweep, this now considers that this high is actually weak, and we're going to continue pushing higher. Let me just clean up these a bit, because it's not the nicest to see all of this all the time. I mean, pretty decent on our analysis, though. We do all call it correct here, so well done, everybody. Let's take a look at the DXY. Anyone got any questions other than? No, and I love questions from the two people that always ask questions. But does anyone here have any other questions? Don't worry, I'm not typing a question that I'm going to send into here under an alias. I'm just replying to a message on our company work chat to just understand something. Oh, I typed 2026, not 2025. What have I done? All right, so the XY, the XY. Still targeting that week low. Nothing done yesterday. Pretty much an inside day. We had a doji candle that suggests indecision on the daily. We came into that level yesterday at 8 a.m. and we traded higher throughout the day into pretty much just the underbelly of the moving average. What's on the 1 hour? Okay, so that's also supply. I do not like these markets, team. I do not like these markets. It's better to speak about fundamentals and geos, I reckon, rather than break down these technicals. I think we need a couple of days for these markets to continue. I think you want to take some time off, and that's the point. You can take time off from the charts. Like if I look at the way the metals are moving at the moment, like we looked at gold, we had strong jobs data. Gold dipped about 0.5% to settle around just about 5,050, 5,060 ounces. We're still seeing buyers successfully defend that 5,000 psychological level. But unfortunately, we've got the resistance at 5,100, which is proving stubborn. Then silver, very similar scenario. We had a huge drop last week, yet now what it's doing is consolidating in a tight range. So that range is about 81.5 to 86.5, which where it's trading is in and around 83s. So that's kind of acting as our pivot point. So as we look at, even though we're seeing extreme fear in cryptocurrencies, specifically Bitcoin, in terms of the fear index at 9, the markets are just trying to find their feet. I think, when we look at the DXY, it's stabilizing around these levels. The euro dollar is what, 118.70s. I think we need to see the dollar regain its yield advantage for us to actually continue trading higher. We've still got, CPI data. We have obviously the continuation of shutdown odds, which is 85%. Maybe you need to start looking at how you're going to hedge your positions into the weekend, because the odds are ever increasing on a government shutdown. And that's before Saturday the 14th, which is Valentine's Day for all of you ladies and gentlemen out there. And if a funding deal isn't reached by the weekend, I would expect gold to trade higher on Monday's open if they do shut down the government. And that's the US government. And the odds were about 85% when I checked earlier this morning. Another article I read yesterday and overnight was about the middle power alignment. Has anyone heard of this? If anyone hasn't heard of it or has, I'll continue talking anyway. So what we're seeing is allies of the US, such as Canada and the EU, are forming independent trade blocs to hedge against Trump's tariffs. So what that would do is it will support the euro and the CAD against the US dollar, allegedly, in the long term. That's what they're trying to do. They're trying to align themselves to create middle power alignment between Canada, between the EU, against Trump. I mean, that's a pretty interesting rhetoric, but we're talking EU and we're talking Canada, unfortunately. So I don't really see any middle power alignment that really being too much of an issue for the US, if I'm going to be completely honest. I mean, I understand why they're doing it, to try and hedge out those tariff and the tariff risk, but it will be built on weak foundations. Again, it's Canada and it's the EU. So take from that what you will. Yeah, I think there are chatters about China and Australia getting involved too. But don't forget, China was already trying to do something with Russia, India, Africa. And we're not just talking like your BRICS. We're looking at it a little bit further out now. And the difficulty when China, Russia, and the other BRIC nations were trying to do it is they talk about how they're trying to dump the US dollar and become less dependent on the US dollar. But everything is settled in USD and it's converted back to USD. So I don't know much about that, Michael. Machiavelli. Are you Italian? Machiavelli. Machiavelli. Is that just because I'm saying it in an Italian twang that I think you're Italian? Michael Machiavelli. You could be Italian, Uzbekistan, Latvian. Ah, you are. Nice. Machiavelli. Ah, okay, so I don't roll the Machiavelli. I don't roll it. I mean, what a beautiful name, by the way. I'm not taking the Mickey. I think that's a beautiful name. Machiavelli. I have some Italian in me. Anyway, so that's why I thought you were initially. Apparently I do anyway. I only found that out a couple of years ago. I thought I was British all the way through, but allegedly not. Do you know, there was a chatter this morning, and I need to look into this. There's chatter this morning about some of these new banks causing a few issues. So I'm going to be looking into them over the next few weeks. One of them is the new bank that we all like to work with. It's where we borrowed our money from after the Revolutionary War and have been in debt since. Yeah. Of course it is. Oh yeah, sorry, I was talking about the middle power alignment. And then I was talking about China and Australia. So yeah, I was talking about how they would convert back to the USD and settle in USD anyway. So it doesn't actually matter what they do. I mean, I personally think the middle power alignment will be built with matchsticks and on a weak foundation, and you'll just see the matches. Trump will come along, he'll throw a flame on one of those, and then it will light the whole thing up, and it will crumble. It will crumble like the European Union, and like Canada's borders. I can't say much. The UK's borders are awful as well, and UK policies are awful as well. UK government and UK policies and the UK party is an embarrassment. The UK is an embarrassment. That is pretty much it. And I live here. All right. So any other questions at all? Any other questions or comments? I'll just quickly pull up Bitcoin just so that we can have a little look at that beauty. Oh, my fingers are not working. Why are my fingers not working? So buying that 63 handle is still paying out. It's still ranging. We can't say it's done anything crazy. It's getting poised for a breakout though. Poised. Do we break out? Do we break out lower? Do we break out lower? There's a lot of volume around 67,000, isn't there, on the day, which was bid up originally by 66,000, 66 and maybe 67 nearly. Looks like okay. I was just checking something. Don't worry, I'm going to revert it. Don't worry. Okay. And there's the break. Let's see if it holds. Plenty of chances to short the sterling in the chaos. Yeah, plenty. And there has been plenty of opportunity as well. Okay, so there's the break on Bitcoin. You'd want to see, so from here, this is actually quite a nice scenario. We haven't seen many of these. So this is the break. From here, what we would like to see is break, retest, level gets respected. We see the hold, and we start to trade higher from here. And then if we do start to show signs that we continue to break high, then we could maybe look to get long, have our stop. You could have your stop underneath the validation point. We're trading up into 69,000s and 50s. But we need to see this hold and close, right? So at the moment, this is just a theory that is actually not going to be lived out. It could break and close just slightly above. And then from there, we would need to see how that next candle kicks on. At the moment, it just looks like it's going to be a fake breakout. But until 1 minute time, you know what? It's 9:58. We'll stay on this and we'll just watch this close. This is the beauty of trading. You can just watch. So again, remember, multiple ways to look at chart patterns. Obviously, this is a descending trend line resistance, which is potentially seeing a breakout. Of course, there are ideas that you can be shorting from the extremes, but as price gets down into a non-technical term, the pointy end of the wedge, we see price starting to really tighten up. Imagine it being like a spring. You've got a very big spring, and the more it compresses price, the more explosive the move, right? So the tighter it gets into the wedge, like so, as long as the wedge holds, of course, the tighter it gets into here, the more explosive that kind of spring theory is, right? Yeah, okay, as it is, we could see this and it could just drift out, but then that's called invalidated. So the idea would be invalidated. We wouldn't be looking at that. We'd be looking at how to adjust it. Okay, so on that last candle on the M15, we failed to break above. This next candle could still do it. Obviously, even if you look at the M5, we closed we closed at what we would kind of call like a shooting star. So we've had a wick above that previous high, but markets have failed to close above. So this does suggest that at this moment in time, lower prices may come in, but this next candle will be the deciding factor. So keep an eye on that. And then from there, again, make your own informed decisions. Nothing we do during these live streams is constituted as advice. It's all here for general guidance and educational information only. Of course, we'd love you all to work, we'd love you all and welcome you all to open and trade with us here at Seacrest Markets. We offer up to 1 to 500 leverage, which is dynamic, very competitive, tight spreads. We offer 2 account types, both spread and commissions, both raw spread and commissions, and a raw spread all built in for you as well. Multiple instruments, multi-asset classes to trade, and we will continue to expand our instrument offering to increase that underlying list for you to trade. But other than that, I will see you this time tomorrow. I'm here Monday through Friday, so Friday will be the closing live stream for the week. If you do have any questions, if you do have any comments, please feel free to do so. But please like and subscribe to all of our channels, comment on what you want to, share it with whoever you can. And of course, let's get these streams to, 4 numbers, 4 digits. But other than that, trade safe, trade smart, trade Seacrest, and I'll see you tomorrow.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest Markets, light in the dark.
Seacrest Markets leading the way, making the move every single day. Charts in the vision, mindsets align. Traders power, no fear behind.